Yes, let's begin the discussion. Uh, yeah, let's begin the discussion. In the previous session, we have already completed emphasis of matter paragraph, and just 1 minute, uh, relating to other matter paragraph we need to discuss now. So, yeah, let's proceed further. So, relating to other matter paragraph we need to discuss now. The emphasis is already completed. In SA 705, there is one point which is covered in SA 705. Suppose if auditor has given adverse opinion or disclaimer of opinion, if auditor has given adverse or disclaimer in the same audit report related to financial statements, you should not talk unmodified opinion in the same audit report. Means indirectly, emphasis of matter paragraph shall not be used in the audit report where we give adverse opinion or disclaimer. More in depth on this we will cover discussion in 805. There you can understand, even in the number 24 exam, this particular point is tested. Okay, yes. So now let's begin with the let's continue with the other matter paragraph discussion. So what is an other matter paragraph? You see here the other matter paragraph is there, already emphasis to be completed. What is other matter paragraph? It's a paragraph in the audit report, that is also a para. It is referring to some matter other than not presented or disclosed in financials. For example, if a matter is referring to something which is presented or disclosed, if I want to talk about a matter which is presented in financial statements, if I want to talk about that in audit report, emphasis of matter paragraph is there. But I want to talk about something which is not presented or disclosed in financials. I want to talk about some matter which is not presented or disclosed. Like, what is that matter? That is something relevant to users' understanding of. Users need to understand about audit, auditor's responsibility, auditor's report. If I want to make the users understand about audit, auditor responsibility, auditor report, not about financial statements, fundamental issues. If at all I want to make the users understand about the financial statements, which is fundamental to them for better understanding, that's emphasis. If I want to make the user understand about the audit, auditor's responsibility, auditor's report, if I want to make them understand, then other matter paragraph. Very simple. Best example I'll give you, one of the finest example I'll give you. For example, just a minute. So, for example, State Bank of India, everybody knows. State Bank of India Limited. This is a banking company, right? Now, State Bank of India Limited, it will prepare two sets of financial statements actually. Consolidated financial statements, standalone financial statements. Standalone financial statements means head office of State Bank of India, and you know how many branches? Approximately 25,000 branches. Approximately 25,000 branches of State Bank of India and head office put together, they will merge it, so that standalone financials of State Bank of India will be prepared. Listen to this example. We are going to discuss about SA 600 also right now. 299 we are going to discuss. 706 we are going to discuss. Then consolidated financials. What is consolidated financials? Standalone financials of holding company plus standalone financials of subsidiary companies and associate companies and joint ventures. Those financial statements are called as what? Consolidated financial statements. Standalone financials means what? Head office plus all the 25,000 branches. And if you see this composition of this 25,000 branches, only 6,000 branches are being audited. 19,000 branches were unaudited. 19,000 branches were not audited. Again, more importantly, for SBI Limited, the main auditor is there, right? I hope you might have already heard in 600 principal auditor, other auditor. I hope you know 600 standard using the work of other auditor. Who is a principal auditor? Who is other auditor? What do you mean by that? Just look at. Now, principal auditor of State Bank of India, actually 12 joint auditors were appointed. State Bank of India is having principal auditor where 12 joint auditors were appointed. Remember, 12 joint auditors. These are all principal auditors of State Bank of India. Let me call them as Mr. P or CAP. He's a principal auditor. Let's call this entire 12 joint auditors as P, principal auditors. Now, these principal auditors has to give audit report separately on consolidated financials, audit report separately on standalone financial statements. Now, but the consolidated financials, they are giving audit report, right? They only audited holding company, man. They didn't audit subsidiary companies. Subsidiary companies were audited by, yes, subsidiary company auditors. Let us call them as yes. Same way, principal auditor, no, they will audit only 20 branches. Top 20 branches of State Bank of India will only be audited by principal auditor. Rest 6,000 branches approximately were audited by Mr. B. B refers to branch auditor. Now, to the public, whose audit report is given, you know? These 12 joint auditors put together conducted an audit, right? That audit report is given to public. For branch auditors, no. 6,000 branch auditors gave audit report, right? That will not be given to public. 6,000 branch audits report is not given to public. Even subsidiary company auditors reports and all will not be there along with holding company. They will be there in the respective company, you know, MCA website you go, you can download, or maybe respective company. For example, SBI Life Insurance is there, SBI Mutual Funds is there. They are subsidiary companies of State Bank of India. They gave separate annual report, audit report, all that. There it will be available. Along with consolidated financials, what will be given? Only audit report given by the principal auditor. You know, now tell me, I am an auditor. You know what auditor is doing here? Principal auditor giving an audit report on consolidated financial statements. His audit report is given. Same way, principal audit report is giving an audit report on standalone financials. This is what will go to public. And the moment when the public see this audit report, what they will think? Oh my God, principal auditor has conducted so many companies audit. Principal auditor has conducted the entire bank audit. They will think like that. But actually, in reality, who has conducted branch audits? Branch auditors. Same way, in consolidated financials, subsidiary companies is also included, right? Who audited the subsidiary companies? Subsidiary company auditors, yes. Public don't know that. Suppose tomorrow if a fraud, you know, some fraud was detected in State Bank, everybody will start questioning P only, principal audits only. But actually, the fraud happened in a subsidiary company where principal auditor has not audited, and the fraud happened in branches which is not audited by principal but audited by branch auditors. Now, division of responsibility has to be stated. Remember, subsidiary company auditor, holding company auditor, both are two different auditors for two different companies. Both are statutory auditors, correct or not? Yes or no? Sir, how did principal auditor give an opinion on consolidated financials? How come he gave? Because subsidiary companies he didn't audit. No, yes, he didn't audit. He gave an opinion based on subsidiary companies auditors report. Subsidiary companies auditors gave unqualified opinion. So he felt, since subsidiary companies gave unqualified opinion, he has an unqualified opinion on holding company. Subsidiary company auditors also gave an unqualified, he gave totally unqualified opinion. Same way, on the standalone financials, all the branch auditors gave unqualified opinion. I have an unqualified opinion on top 20 branches, head office audit and all. I am only doing. I have unqualified opinion. They are also giving unqualified. I am giving unqualified opinion. But public believes that, public thinks that since I only gave the opinion, I am the one who is signing the audit report. They might think that I only have complete responsibility. I only conducted entire audit. I should tell the public that, dear public, please remember, yes, you are reading my opinion only. I only gave audit report, but my opinion on 6,000 branches is based on their auditor's report. My opinion on subsidiary companies, my opinion on consolidated financial statements is based upon not only my audit, but also based upon subsidiary companies auditor's report. So please make a note of this. Like this, I want to tell to the public where I can alert the public regarding this other matter paragraph. That's it. That is how other matter paragraph is used. You see, other matter paragraph, we want to explain the users. We want to explain the user something relevant to the users. We want to explain, just a minute. We want to explain to the users something relevant to the user's understanding of auditor responsibilities. I want to specifically tell that I am not responsible for certain things. So through other matter paragraph, we will tell that. Now look at, not only auditor responsibility, I want to tell them about something about audit and auditor's report. I think you might have aware of joint audit concept, and some of you would have seen this point. Joint auditors will give common report, correct? All joint auditors come into a common conclusion and give a common report, remember? And Suppose if one of the joint auditor want to give a separate audit report, like for example, State Bank of India has 12 auditors, right? One auditor want to give adverse opinion on the State Bank of India. Maybe according to him, there are severe misstatements, pervasive level misstatements according to him. So he decided to give adverse opinion. He want to give adverse opinion. And remaining 11 auditors want to give either qualified or unqualified. This fellow alone want to give adverse opinion. Tell me, is he bound by majority remaining 11? Should he follow must and should 11? No. You might have seen a joint auditor is not bound by majority. For example, in 299, I think here itself somewhere we have already given 299 standard also we mentioned. Just a minute, I'll show you. 299, you see here, reporting by branch, reporting by joint auditors. We all have seen this. A joint auditor is not bound by majority. If there is a difference of opinion, disagreeing joint auditor can issue separate report. In that case, each joint auditor, look at this, should refer each joint auditor's report should refer to the other joint auditor's report. So joint auditor's report should talk about other. Very simple. Now here 11 auditors put together giving one audit report, and one joint auditor is giving one audit report. Two audit reports are going to the public. Immediately public will have confusion. Which audit report to believe? You also might have, sir, which audit report then public has to take, sir? Very simple. Remember, one joint auditor is giving adverse opinion, right? He is giving adverse opinion. In basis for adverse opinion, he will tell his own reasons why he is giving adverse. Remaining 11 joint auditors, they are giving unqualified opinion and they have some reasons of their own. Public will see the reason which you gave in basis for opinion para, and they follow accordingly. Whichever is convincing for them, they will follow. You don't have to worry about what public they have to believe. You are giving reasons. That's why you are giving. Why are you giving basis for qualified opinion, basis for adverse opinion, basis for disclaimer? Why are you giving reasons? So that you may feel material and pervasive. Public may not feel. Somebody in the public, as some stock market aggressive trader, may not feel that it is very material and pervasive. So for that reason, we have to give basis for opinion also. You might feel material misstatement or pervasive, but public or somebody in the public may not feel the same exactly. So for that reason we should give. Now joint auditors, each joint audit report should refer to other joint auditor. What does it mean? 11 joint auditors together give one report, right? They should tell, look shareholders, there is one more auditor's report is there, please refer to that. Same way, that one auditor who gave separate report, right, he should also he should also tell to the shareholders, see shareholders, you are seeing my report, there is another report called 11 joint auditors together gave one report, please refer to that. Where they will refer? Other matter para. Where they will refer? Other matter para. So you see, in other matter para, there is one more term is there in other matter paragraph. What is the term in other matter paragraph? Just a minute. So in other matter paragraph, you need to talk about auditor responsibility, you need to talk about auditor's report. That's what the auditor's report exactly mean. Right now, for example, I will show you one practical document. I will show you State Bank of India report. So this is a State Bank of India report, annual report. Okay, this is State Bank of India annual report, 23-24 related. 24-25 report is not yet come. 24-25 financial year report will come in May month, May 2025. By then your exams of May will also be over. Okay, fine. Anyhow, look at this. This is a State Bank of India annual report. So in this, I want to directly go to standalone financial statements. You see, this is standalone financial statements of State Bank of India. Just a minute. Let me go to the consolidated financials. So above that, this is consolidated balance sheet. Above this balance sheet, there is an audit report on standalone financials. Nothing. Standalone financials, first balance sheet, P&L notes they gave. Then audit report on standalone financials is given. This is audit report of State Bank of India. You see, this is the auditor's report on State Bank of India. Standalone financial statement. See how lengthy the audit report. You see here, report on audit of standalone financial statements. This is the State Bank of India audit report on standalone financial statements. Independent auditor's report. Yes or no? Now again you see here. Again you see straight away which side heading? Opinion, which means State Bank of India auditor gave an unqualified opinion. And if you see what they have audited, we have audited. By the way, who have audited? I will show you who have audited also. You see this audit report is signed by, so lengthy this audit report is, you see this audit report is signed by how many auditors? Array, UD number is there. You see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. I told right, 12 joint auditors were there. 12 UD numbers were given. 12 joint auditors together gave only one audit report. Just for the sake of example, in joint audit, I took 11 and 1. It's actually single audit report only they gave. But one of the auditor, if at all he want to give a different audit report, he can give that also. That option is also there. Now you see, you see other matter paragraph. Right now we are actually discussing about what? Other matter paragraph. What are they saying in other matter paragraph? You see, see, actually this audit report is given by 12 joint auditors, means principal auditor. Principal auditor is telling in other matter paragraph. What is he telling? We did not audit. See the wordings. We did not audit financial statements of 6,000 branches. Okay. Whose total assets? These branches know the assets values are 23 lakh crore. And these branches revenue is 1.7 lakh crore. Okay. The financial statements of these branches have been audited by branch auditors, whose reports have been furnished to us, and our opinion relating to the amounts included in respect of these branches. With respect to these branches, amounts are there no in the balance sheet and P&L is purely based on the branch auditor's report. Indirectly, what are we telling? Look, you are reading my audit report on the standalone financials, but standalone financials has 23 lakh crore worth of assets, 1.7 lakh crore worth of revenue. That is not audited by me. That is audited by branch auditor. Why are you telling this? You are telling the public that you are not responsible for this. If at all tomorrow any fraud happened in these 6,000 branches, you are not answerable. They are accountable. That's what you are telling. Division of responsibility. Now, in fact, in the recent in 2024 August, NFRA has discovered one fraud with respect to a coffee day. Where KPMG firm is the auditor, where the firm was levied 10 crore penalty. The engagement partner was levied approximately 50 lakh penalty. And SQC standard, you might have seen, engagement quality control reviewer, he was levied 25 lakhs penalty. And what the NFRA told, that firm, NFRA has said that, NFRA in the order mentioned that BSR and code does not comply with the 600 standard requirement. Now let us understand beauty of 600 standard. By the way, before I further go into it, so other matter paragraph, I hope you understood. You see, again, opinion section, you see, we have audited, same introduction. You see again, in our opinion, to the best of our information, the financial statements are showing true and fair. Array, same para, what we have seen. And here you see, central offices, 17 head offices, top 20 branches were audited by us. Whereas 5,999 Indian branches, 35 foreign branches, totally 6,034 branches were audited by branch auditors. Indirectly, we are telling to the public that we are not responsible for branches which is audited by branch auditor. So that's the important observation. So other matter paragraph is mainly used to describe auditor's division of responsibilities. Now, let us first understand SA 299. First, let's understand SA 299. Then immediately we will go for, SA 600. Now, State Bank of India is conducted. State Bank of India audit is being conducted by joint auditors, 12 joint auditors. What is joint audit? We all know. Appointing 2 or more individuals or 2 or more firms or 2 or more, a combination of individual and firm for conducting audit of the financials. We call it as what? Joint audit. Generally, it is popular in larger entities. Under 139 subsection 3, subsection 2, subsection 3, subsection 4, rotation of auditors provision is there, right? There, one of the explanation is there. Members may take a decision that audit will be conducted by more than one auditor. Sometimes you might get an MCQ. Under Companies Act, joint audit concept is silent. Is it true? Absolutely not. Actually, joint audit is not discussed anywhere in the section directly, but in 139 subsection 3, as a footnote in the explanation in one of the explanation or proviso, shareholders were given a power to appoint auditor the shareholders were given a power to appoint more than one auditor. Indirectly, through this section, joint audit provision is discussed in Companies Act. Now, what is the responsibility of joint auditor? Okay, sir, joint auditors were appointed. What's the responsibility? Very simple. They need to divide the work and then do. When joint auditors were appointed as an auditor, each joint auditor will not do entire work. The joint auditors, 12 joint auditors were there, right? They will divide the work between themselves. How they will divide? They will divide the work. Each work will be divided among us joint auditor. Accordingly, a joint auditor is responsible only for the work allocated to him. How the work is divided? Based on assets and liabilities, based on income and expenditure, based on geographical identified units, based on period of financial statements. Getting it? Like some joint auditors will be focusing on income, some will be focusing on expenditure, some will be focusing on some business units, some will be focusing on other units, some will be focusing on north area, some will be focusing on south area. Joint auditors will divide the work based on their mutual discussion. Next, There are certain cases where combined responsibility will be there. Many a times this was asked as a 4 marks question. Under what circumstances joint auditors will have combined responsibility? Very simple. Audit work is not divided among joint auditors, and the work is performed collectively. Decisions are taken collectively by joint auditors in common areas. Matters is brought to joint auditors' attention. All the auditors got to know some point, and all of them agreed upon that. Then only they are combinedly responsible. And ensuring financials are as per statutory requirement. Well, see, State Bank of India, 12 joint auditors are signing on the balance sheet P&L, right? So they need to ensure that balance sheet as per the correct format. Balance sheet is as per 3rd schedule of the Banking Regulation Act, and they are responsible for presentation disclosure as per applicable framework. They need to ensure that accounting standards are followed. And audit report, no, all the joint auditors together giving common audit report, they are responsible to ensure audit report is as per SA 700 705 as per proper auditing standard. And further, remember, while deciding nature, timing, extent of procedure, each joint auditor is responsible for determining nature, timing of their assigned area. When the auditors divide the work between themselves, no, each joint auditor can decide their responsibility respectively. They need to plan their own works. Other joint auditor will not help you to plan your work. See, common areas all of you together will plan, but respective individual areas, each joint auditor only has to responsible. He is only responsible for determining nature, timing, extent. Nature, timing, extent means what? Audit planning, nothing but audit procedures, nothing but, okay, for their assigned areas. They must individually assess internal control system, whereas for common areas, joint auditors collectively decide what are the nature of procedures, timing of procedures, extent of procedures for common areas. Okay, so however, remember, even in common areas also, once joint audit is decided, very important point, executing these procedures correctly remain individual responsibility. For example, no, joint auditors decided the work, and common area is there, and they plan the common area, how each joint auditor has to work in the common area part. They decided one of the joint auditor in the common area, he decided to verify so and so. For example, purchases we decided to verify commonly, or for example, take State Bank of India itself. Loans and advances is a common area. Let us assume in loans and advances, credit worthiness of the customer, whether it is correctly checked or not, one joint audit firm took the responsibility. One joint auditor firm took responsibility to assess credit worthiness, whereas another joint auditor, common area, entire loan is a common area. Another joint auditor is responsible for valuation of security. Another joint auditor is responsible regarding disbursement function. Now, my responsibility within the common area, I fulfilled. These joint auditors, they didn't fulfill their responsibilities. Now tell me, since it's a common area, am I answerable for their work also? No. So even in a common area, procedures performing is individual responsibility. Remember this point. You have a practical question. In our question bank, I think we have already covered. In the question bank, we already covered. Just now, I will tell you. Wait a minute. So you see here. Yes. In respect of common area, you see here, there are some questions which we have given in our question bank. Test your understanding 5 is there, which is a very good question. In respect of common areas, joint auditors are responsible for nature, timing, extent of planning, agreed process. The responsibility lies on the concern. In the given case, audit procedure related to operating effectiveness over computer operations, including backup and all, is a common area. However, audit procedures relating to testing controls over batch processes were actually performed by the so-and-so associate, although these were planned jointly. In case any lapses, the respective firm is only responsible. It's a test your understanding question in ICAI book. This is there. By the way, 299 standard is actually discussed in the 3rd chapter or 2nd chapter, gap chapter. Okay, it is not covered actually in the audit report, but we kept it as part of audit report topic for the sake of convenience. For example, in this book, you see 299. For example, you see in this book, you see responsibilities of joint auditor. Original it is discussed in which topic? You see, which is there as part of the gap 2nd chapter. In the ICAI book, it is given for you in the 2nd chapter. So in the 2nd chapter, I mentioned 299. What I told you, discussed in audit reporting. So in the audit report, we have covered you. Able to understand? Now let's continue. So I hope you understood regarding common area. Common area means it's not that if one joint auditor made a mistake, everybody is held responsible. No. In the common area also, the work will be divided between the joint auditors. Each steps, common areas will be divided into multiple steps. Each step will be performed by one of the joint auditor. By the way, I'm reminding you, if at all you feel fast, you have a speed reduction option. Playback speed you can reduce and you will get more clearly. I am ensuring each and every word is clearly pronounced by me. Okay, it is your turn. I am doing extreme hard work, man. Okay, that's it. You reduce the speed and then listen. You will understand. You will get the point which you have never got the clarity. Getting it? I bet the kind of clarity that you receive in this marathon is next level. Next. So that's it. Further, no. Joint auditors, no, if at all. Just a minute. Joint auditors, no. If joint auditors plan to modify the opinion in the audit report, if at all they want to give a modified opinion, they must inform to top management and reasons. We already saw 705. If at all we want to give a modified opinion, we have to communicate to top management. Similarly, if at all they want to include emphasis of matter para or other matter paragraph, even that also we have to communicate along with wordings. Similar point is already given in 706 also. Yes or no? Then coordination. In exam they will straight away ask you a 4 marks question. Coordination. Common area, they might ask you they may ask you regarding they must straight area. Joint responsibilities, a 4 marks or 5 marks question. And deciding nature, timing, extent of joint procedures by joint auditors, a straight 4 or 5 marks question can be asked. And next, coordination. What is the coordination? Proper coordination is essential. Proper coordination is essential. If any matter is identified which is affecting other joint auditor, immediately you must communicate them before the date of audit report. Important for MCQ. Then entitle. By default, a joint auditor can trust other joint auditor work. For example, other joint auditor came and told, yes, my portion is completed, boss. You should not verify. You need not verify. You can trust that he has done proper duty. Tomorrow, if at all he didn't do properly, he is only answerable, right? You are not right. So why are you worrying? So in joint auditors, division of responsibilities, that don't worry. Then further. So remember, this entire matter I can't explain right now. So I told you the gist of this coordination point, what exactly it talks about. You please read on your own later. Now, special consideration, most important in this joint audit. A 5 marks question might come directly. A 5 marks question might come directly. What are the special considerations? Very simple. From each joint audit firm, State Bank of India, 12 auditors were there, right? From 12 auditors, engagement partner from each audit firm, key team members must be involved in planning the audit. Further, all the joint auditors must jointly establish the overall audit strategy. Further, all joint auditors should together develop a joint audit plan. You know, in exam sometimes they'll ask you, what are the points to be considered in a joint audit plan? A 4 marks question might come. Joint audit plan, when you're developing, no, you clearly address division of areas what, common areas what, reporting objectives. Remember, reporting standards, reporting requirements, reporting objectives. 3 different terms. Do not confuse, do not interchange. Reporting standard means 700, 701, 705, 706, 710, 720, 800. All these are reporting standards. Reporting requirement means CARO 2020 Companies Act reporting 143 subsection 3. That is reporting objectives means SA 300 standard talks about reporting objectives. We will be discussing reporting. You will have a discussion on reporting objectives in SA 300. You open your 3rd chapter, audit planning strategy. Ascertain reporting objectives is one of the factor for overall audit strategy. Reporting objectives means what? In that discussion is there in that chapter. Please go and see the reporting objective. Reporting objective means communication related responsibilities. And further, result of preliminary engagement. This is also covered in 3rd chapter. Preliminary engagement. Procedures as per 210, procedures as per 220, relevant ethical requirements. These 3 put together, we call it as preliminary engagement activity. What is preliminary engagement activity is there in the 3rd chapter, audit strategy chapter. That's it. And assessment of resources required. So a joint audit plan has to be developed after considering assessment of resources, after considering preliminary engagement, after considering reporting objectives, after considering division of areas and common areas, and significant factors shall be communicated between joint auditors. Further, risk assessment must be done by each joint auditor and communicated to other joint auditors. Joint auditors finally should document planning, audit procedures, nature, timing, extent, and perform it. And finally, joint auditors should obtain a common engagement letter. Nothing but we will give a common engagement letter. Management has to sign it and give you a common engagement letter back. Okay, and common management representation letter. Sir, what is a management representation? We will discuss in upcoming revision. 580 standard will be discussing. There I will talk about written representation. Next, work allocation. Ultimately, division, common area. You decided, right? Work allocation document is there, right? That work allocation document, each joint auditor should have a copy, and that copy shall also be communicated to those charged with governance. That's it. 299 over. Easy. Next, 600 I will discuss. Going concern, I'll come back to it. Wait, don't worry. Going concern, I'll come back to it. SA 600. You see, actually, what is SA 600? It's SA 600. We need to discuss it. Discussed along with this chapter. In this chapter only you should cover, but actually it is covered in audit strategy chapter. SA 610 also, it is to be discussed in this chapter only, but it is covered in audit strategy chapter. Now let's go to SA 610, 600, 620, all that. Now I will cover only 600 topic ma. Again 610, 620 later I will be covering. So what is SA 600? You see here. So I'm going to SA 600. Right now we have understood one point. Remember SA 600. SA 600 is covered as part of our third chapter. In our book, it is there in the third chapter, audit planning and strategy. For more clear purpose, 41 is the page number. Those of you who are reading this GOAT notes, 40 number. What is this SA 600? Using the work of another auditor. Using the work of another auditor. Just 1 minute. Just 1 minute. So using the work of another auditor. So who is using the work of whom? Just now I told you State Bank of India 12 joint auditors using the work of 6,000 branch auditors in respect of standalone financials. Same 12 auditors using subsidiary company auditors audit report in case of consolidated financials. Nothing but you are using work of other auditor. Other auditor is a component auditor. From consolidated financials point of view, many students don't understand this definition itself. I will prove it right now. Component, other auditor, principal auditor, definitions. This itself many students don't understand. What is a component? You see how cleverly it is drafted. Division branch is a component, and subsidiary joint venture other entity is also component. Array, what are they? Division and branch are from standalone financials point of view. Subsidiary joint venture is from consolidation point of view. Tell me honestly, how many of you know this difference? Standalone, the component definition, division and branch is a component from standalone point of view. Subsidiary joint venture is consolidation point of view. How many of you know, sincerely know it? Please give it as a comment. Okay, so component means division and branch. Okay, whose financial information is included in financial information audited by principal auditor. A subsidiary company financial statements are included. Financial information is included in consolidated financials, which is audited by principal auditor. Same way, 6,000 branches related financial information is included in standalone financials, which is audited by 12 joint auditors. Exactly, that's what component. Now, who is the principal auditor? He is an auditor responsible for reporting on the entity. You see, entity financial information. Principal auditor is reporting on entity information, and this entity information includes financial information of components, which is audited by other auditor. Then who is other auditor? An auditor who is responsible for information of the component, which is included in financial information audited by principal auditor. So component auditor is one, other auditor is the auditor of component whose financial information is included in financial information audited by principal auditor. That's it. That's how the definitions of principal auditor, other auditor, component is drafted. Now you see the standard starts with the most important clarification, division of responsibility. The principal auditor is not responsible for work of other auditor unless there is a reasons to doubt about their reliability. If a principal auditor has a doubts about their reliability, then only you need to verify them. Otherwise, you don't have to. You are not responsible. If the principal auditor relies upon other auditor as a part of the audit, he must clearly state division of responsibility in the report indicating extent of work done by other auditors. That's why State Bank of India, other matter paragraph, we have not audited 6,000 branches, which is audited by other auditors. These branches will have 23 lakh crore worth of assets, 1.7 lakh crore worth of turnover, that is audited by other auditor. So you should clearly state that. In exam straight away they will ask you, write about division of responsibilities, all that. You know, generally auditor is ultimately responsible for forming, expressing opinion. However, you can rely on the work of others if adequate skill and care is exercised. When you're relying upon work of independent statutory appointees, especially if you're relying upon other statutory auditors, for example, you must clearly state such reliance. Where you will state enter this division of responsibility, other matter paragraph. Other matter paragraph. How many of you really understood other matter paragraph truly like this? That's it. Next, who said auditing is a theory subject? It's a very practical subject. The point is people ruined it by making it boring, by not explaining, by not discussing the subject in a true sense. Now, acceptance as principal auditor. What is acceptance as a principal auditor? What is acceptance as a principal auditor? Just a minute. What is acceptance as a principal auditor? You know, NFRA levied cafe coffee day KPMG a penalty, right? Because KPMG violated this particular clause. You know what exactly? You know, a company approaches you as a principal auditor. A company approaches you for conducting the overall company particular audit. Just a minute. A company approaches you to conduct audit of the entire company. You should not blindly accept. You know, there is a standard called SQC. As per that standard, there is a procedure. I hope you might have seen this. Acceptance and continuation of client relationship. Okay. So, and if at all the company is calling you for appointment as an auditor, immediately you should ask this company, sir, what exactly the company is doing? Are there any subsidiaries? Suppose if the company has subsidiaries, where predominantly business happening, you should see. Sometimes no. Holding company might not have any business. Subsidiary companies only might have major business. If at all subsidiary company is what majorly conducting the business, and if that subsidiary company is being audited by another auditor, not you, holding company is just a namesake entity, you should not accept the audit of holding company. That is what acceptance of principal auditor guidelines says. You know, this particular point was asked in 2022 attempt in November or May, or 2023 attempt it was asked for a 5 marks question. Write about acceptance as principal auditor. So the auditor must assess whether their participation is sufficient so that they can act as a principal auditor. So can I act as a principal auditor for this entity? First of all, check out whether my participation is sufficient, like how much materiality of the portion audited by me, how much knowledge I have about the component, what is the risk that I am covering in the component, whether principal auditor need to perform additional work so that my participation becomes significant. So you need to check these parameters before you accept as a principal auditor. Further, once you accepted, okay, you understood, are a materiality major portion I am only going to audit, our company audit, our holding company is where major business is happening, major financial transactions are happening holding company, and significant portion you are doing audit. Your audit of holding company implies, it represents significant audit is being performed by you. If at all this kind of clarification, if at all this kind of conclusion you took, you accept as a principal auditor subject to SQC guidelines. In SQC there are some other procedures for acceptance and continuation of client relationship. So after verifying those guidelines, you can accept it. Now once you accepted, there are some procedures, principal auditor's procedure. And you know what, in the recent number 24 paper, this third point is what tested. Procedures to be performed when using the work of other auditor. When you are using the work of other auditor, this was tested in the recent November. By the way, my dear, please come out of this assumption, sir, in last exam it is tested, means this time it will not be tested. No, nothing such. ICAI do not have any such pattern of testing. There is no such pattern. Getting it? So don't be in this all blind, unnecessary, useless logics. Focus on proper learning. Any paper you can handle, mark my word, any paper you can handle. The kind of clarity you have right now, whatever I'm discussing, now you go back and revise the subject, you feel very fantastic, you feel more connected to the subject, revision becomes quicker and faster, your confidence level improves. Now, procedures to be performed when using the work of another auditor. So what are the procedures to be performed? Very simple. At planning stage, the principal auditor should perform procedures to ensure adequacy work of done by other auditors. At planning stage, advise them how other auditors' work is going to be used by you. Inform other auditors what are the areas requiring special attention. Advise other auditors about accounting, auditing requirements. Branch auditors, no, component auditors may not aware of reporting requirements. So tell them, hey, hello, for this company, CARO is applicable. So you also give a CARO report. I should only tell them. The principal auditor, no, not only telling them all this, I can review procedures performed by them. So I can ask branch auditors, dear branch auditor, what are all works you did? I can do one thing. I will send a questionnaire or checklist to them, and I will ask them to fill and send back, and they need to compulsorily do it. If at all I still have doubts, I can visit the other auditor, and whether I will visit, I will get a questionnaire, how far I will review other auditors, review written summary of procedures of other auditor, whatever he works he did, know how much I will review, nature of review, extent of review, that and all depends upon circumstances and competence of other auditor. Generally, if the other auditor is chartered accountant, you generally don't do all this. If other auditors are chartered accountants, you will not do all this. That is what even Coffee Day, BSR and Co chartered accountants, KPMG told in NFRA to NFRA. But NFRA did not listen. What NFRA said, you must review other auditors' procedures. Internationally, this is what principal auditors has to do. Our Indian auditing standard is not in compliant with international standard, but you must do audit as per international standard also, right? So like that and all they did. Finally, Consider, suppose no other auditors have found something significant findings they made, like in the sense some big issues were found, some big material misstatements were there. If then principal auditor can discuss audit findings and other matters with other auditor and management of the component. Additionally, principal auditor can also apply supplementary procedures to verify records and financials if necessary. These are supplementary tests, no, they can be conducted directly by principal auditor, or supplementary procedures I will ask other auditor to perform these supplementary procedures depending upon the situation. So if I ask any supplementary work to do for other auditor, the principal auditor can tell other auditor supplementary procedures. And if you remember 805 standard, it says one point, exclusion. In 805 standard, 805 standard applicability, if you see, exclusion one point is there. It does not deal with procedures performed by other auditors at the request of principal auditor as per SA 600. Now principal auditor is asking other auditor to do supplementary test. No, I asked him to do supplementary test on trade receivable. Does it become audit of specific element as per 805? No. Audit of specific element as per 805 is an audit request by client to the auditor. That is different. Here I am asking other auditor to perform a specific element related some procedure. That just because I am asking him to perform or verify some specific element, that doesn't mean 805 special engagement and I will have to pay, some client has to pay some additional fee to him. No, not that. The procedure which I am asking him as per SA 600, he is duty bound to do that. Further, can a principal auditor ask other auditor working papers? You can ask, no problem, but you can't demand. If at all other auditor says, sorry boss, I will not give you, you can't demand. If you have any doubts in branches, no, any transaction, you go and do. You have a right to visit the branch, no, you go and do, verify, no problem. Suppose if other auditor is not professionally qualified, in some cases other auditor may not be professionally qualified. For example, if the component is a foreign country component, foreign branch, that auditor his procedures might not be something matching as per Indian standards. Then finally, principal auditor shall document. A straight question like this might come in exam. By the way, any question, for example, no, in exam they'll ask you write about consideration of significant findings of other auditor, and especially what is the responsibility of principal auditor if other auditor is not responsible. You know, they will ask you these two. This they will ask you for 3 marks question, this they will ask you for 2 marks question. Anyway they can ask. Finally, what are the documentation principal auditor has to maintain? What are the documentation principal auditor has to maintain? Look at this. Principal auditor's documentation requirement. The principal auditor must document audited components list. What are all the components audited by component auditors? List you document. And what conclusions you have taken? Document. Example, recording discussions with the other auditors. What are all the review of procedures you did? Suppose, however, if sufficient evidence confirms compliance with quality control policies, need not document reasons for limiting procedure. Suppose you felt that other auditors and all done proper works and all quality as per your quality control policy also, you were satisfied. Maybe you have not done much procedure. You can limit your procedures. Getting it? Generally, in reality, we don't review their works and all. We simply document how many components company has. 6,000 branches. 6,000 branches. So names of those auditors alone we will document it. Next, if other auditor report is not unmodified, what does it mean? Suppose other auditor gave a modified opinion, the principal auditor shall also document how that modification is addressed, specifically qualification and adverse remark when forming your own report. That's why you see in 143 subsection 3 there is a point, I think clause number B or clause number C. Have you received other auditors report? If so, have you considered it appropriate? They will ask you in 143 subsection 3. Maybe if possible I will cover that reporting requirement before Caro. That's it. So in exam any of this can be asked. Can a principal auditor has a right to visit and examine accounts of a component? Yes, he has a right to visit a component. Principal auditor has to assess competence of another auditor before relying on another auditor work. Principal auditor must evaluate their competence, especially if he is not a member of the institute. In coffee day scam, in coffee day case, NFRA questioned KPMG, why did you not check subsidiary company auditor's competence? What KPMG replied, sir, subsidiary company is a chartered accountant. As per SA 600, I don't have to check their competence because they're members. Under 600 standard, I have to check the other auditor's competence only when there is only when he is not a member of the institute. That's it. Next, coordination. They may ask you straight question. Write about coordination between principal auditor and other auditor. Proper liaison, proper coordination is necessary between both the auditors. This involves written communications. Other auditors should cooperate with principal auditor, alerting them any important findings which will be important for principal. Same way, principal auditor should also notify the other auditor any important matters that affect other auditors' work. So principal auditor sometimes may require other auditor to answer a questionnaire. Getting it? Finally, sir, other auditor gave a modified opinion, sir. What principal auditor has to do? Suppose, no, State Bank of India, I am 12 joint auditors. We are all 12 joint auditors, you and me, for example. We decided unqualified opinion is correct, but branch auditor's report contains adverse opinion. What should I do? Should I also copy adverse opinion? No. Branch auditor gave adverse opinion, qualified opinion, considering materiality levels at branch point of view. You should see what reason they gave adverse opinion. See what is the reason's weight. In the overall company, you should see the weight. Suppose branch auditor gave adverse opinion. You felt that that is material pervasive at branch level. That is immaterial at company overall level. You can ignore it. You can still give which opinion? Unqualified opinion. You see, if other auditor issues a modified report, principal auditor must assess whether it impacts their report, whether it is impacting overall company. The principal auditor should document how they dealt with qualifications of the other auditors. And if principal auditor, for example, cannot use the work of other auditor, you are not getting their audit reports, company is not cooperating you will give a qualified opinion or disclaimer of opinion unless the branch is immaterial. Suppose if the branch itself is immaterial branch, it is not at all a significant branch at all, and that report you did not get, you don't have to worry. If it is a material branch, significant branch, their audit report you are not able to obtain, you don't know what is happening in that branch, you will give on the overall company qualified opinion, adverse opinion, as the case may be. In exam they will ask you straight away this question itself, write about audit reporting by principal auditor, or if other auditors report contains a modified opinion, what principal auditor will do, or write about auditors reporting requirement in case of using other auditors report. So like that they will ask you. So this part you need to write. That's it. 600 standards over, 299 is over, 600 over. Now let me go back to 706. Let me go back to 706. You see, you see here 706. Now once again you see 706 heading. What 706 exactly says? What is 706? Other matter paragraph. Emphasis already completed. Other matter paragraph is a para in the audit report which is referring to a matter not presented, not disclosed in financials, but relevant for users' understanding of audit, relevant for understanding audit responsibility, relevant for understanding auditor's report. That paragraph is called as other matter paragraph. Yes or no? That's it. Other matter paragraph, how we should include? Include OMP in the audit report if not prohibited by law. They will ask you when other matter paragraph can be reported, under what circumstances other matter paragraph shall not be reported. Like that they'll ask you. If there is a prohibition in law, you should not report, or if that matter you decided as a key audit matter, then also don't communicate it under other matter paragraph. For other matter paragraph also you must communicate it in a separate section in the audit report. Just now I showed you State Bank of India audit report. Other matter paragraph is given as a separate section, side heading to it. That's it. 706 is over. Right now if you check, 700 is mostly completed. Technically speaking, 705 is completed, 299 is completed, 600 is completed, 705, 706, 600. Three standards we completed predominantly, which are actually big standards, technically big standards. 700 also half is actually completed. Now let us now look at, let's again go back to 700 contents of audit report. You see the contents of audit report, what are all that we completed, right now, other matter paragraph is completed, emphasis of matter paragraph is completed. These are the sections in the audit report we now have already completed. Now let's understand material uncertainty related to going concern 570 standard. What is SA 570? Material uncertainty related to going concern. Now directly 570, actually 570 standard is there as a part of, you see, it is there as a part of your completion and review chapter. In ICAI book it is there in completion and review. We also kept here, but it is covered in audit report chapter for a better discussion. So that's the reason we will be discussing as a part of audit report chapter. You see here, just a minute. Yes, going concern, I have given one comprehensive diagram. I bet you will not find such a kind of comprehensive diagram for this in for 570 so clearly. Actually, this diagram is developed based on SA 570 CA inter material. In CA final, you have a SA 570 discussion in completion and review chapter, right? That is not at all discussed properly. Very basic level it is discussed. So that's why I selectively applied some judgment, my judgment, and brought some content from CA inter book also and kept here. This entire matter you will not find in CA final 570 standard. You will not find this matter in CA final book. But beyond what is discussed in this, sometimes in exam they're asking. So that's why I balanced everything and gave you content accordingly. But still, I maintained my total book size less than approximately 360 pages. Okay, fine. So what is this SCA 570 is about? Just a minute. I will rotate the page. 1 minute. Yes. So you see SCA 570. What exactly 570 is about? 570 standard is talking about what? Going concern. What is meant by going concern? By default, every company generally prepare their financial statements using going concern assumption. What is the importance of going concern assumption? Because of going concern assumption only, fixed assets are shown at cost minus accumulated depreciation. If at all going concern assumption is not there, fixed assets must be shown at NRV. You know what is the consequence of fixed assets showing at NRV? Most of the property, plant and equipment except land, most of the property, plant and equipment, what is shown based on carrying value. For example, Ford Motors is there, Ford company, their carrying value is how much? 10,000 crore. What is the realizable value? 750 crore. That's how bad it will be. Fixed assets, plant and machinery. For example, Reliance is there, Jamnagar factory they have. The Jamnagar factory historical cost is 4 lakh crore. After accumulated depreciation or before accumulated something, 4 lakh crore. If at all they have to sell this factory to somebody, no ready-made buyer will be there. Hardly 5,000 to 10,000 crore is what will fetch that machinery and all, excluding that land. That's a value. But then why are we showing fixed assets at historical cost then? Because we don't have intention to sell. What do you mean by not having intention to sell? You without selling, what you will do? I am running business, man. I will run the business and recover this over next 10 years. And then I will recover more than this. That's why in accounting standard 28 impairment, recoverable value compute. If at all recoverable value is more than carrying value, no impairment. If recoverable value is less than carrying value, impairment loss. Impairment is nothing but something similar to going concern adjustment also. Able to understand? Yeah. So as an auditor, you have to check whether company is using, see, very simple. Suppose I'm the auditor of Reliance company. They are using going concern assumption. I need to check, can they use it? For that, you need to check whether company is stable or not. Company is stable or not. For example, a company, a company going concern. Okay, let me do one thing. What exactly auditor has to do in this entire standard? What exactly auditor has to do? First, ask management whether they are doing preliminary assessment or not. Just a minute. Yeah. Ask management whether they did preliminary assessment about going concern, because they are the primary party who is responsible to do going concern preliminary assessment. Sir, they did their going concern assessment. They did ask them, do they identify any symptoms? Events and conditions means nothing but what? Symptoms. What symptoms, sir? Events and conditions that cast doubt on going concern ability. Events and conditions that cast significant doubt on going concern ability. Sir, what do you mean by events? I hope you remember. Events and conditions are broadly divided into 3 types: financial indicators, operating indicators, other indicators. Remember these 3 points. I hope you remember, my dear. I will show you, don't worry. Ask management, are there any events and indicators like this? Check out. Management said, sir, we identified, sir, events and conditions. Yes, sir, we identified the events. Now you need to perform further audit procedures. In the SCA 570, this is also called as additional audit procedures. This is also called as what? Additional audit procedures. Sir, management identified going concern issues. Some events and conditions identified. Symptoms are identified. Getting it? Perform additional procedure. Why you have to, what you have to do? Are events there, symptoms there? Why you need to perform additional work? to determine, see this, very important observations, to determine whether material uncertainty exists or not existing. Sometimes no. See, for example, no, before I proceed further, let me show you indicators. You see, examples of events and conditions casting a doubt on going concern. One of the event is financial event. For example, net liability position is there. The company is having accumulated losses. They have a net liability position. They have something called net liability position. They don't have a profit. Their total financial position is negative. Getting it? Fixed borrowings, so they are approaching maturity. No proper renewal. Renewal is not possible. Short-term borrowings for long-term investments. Withdrawal of financial support from creditors are not supporting. Operating cash flows are negative. Ratios are adverse. Operating losses. Assets and all value deteriorated. Arrears or discontinuation of dividend. Creditors we are not paying on time. Non-compliance with loan. Conversion from credit to cash on delivery. Failure to obtain financing for a new product. I want to launch a new product, but I'm not getting finance anywhere. Then operating. These are all financial symptoms. These are all financial symptoms that company may not continue in future. Company cannot continue the business because financially they're poor. Operating events. Management want to liquidate. Loss of key management. You know what? In May 24 exams, they have asked one question on management want to liquidate. You know, the emphasis of matter paragraph related question they ask. I will tell you, don't worry, I will show you. You know, loss of key management, loss of major market, labor difficulties, shortage of important supplies, shortage, material shortage. Many companies across the world are facing a semiconductor chip shortage, because of which some particular industries are badly affected. Emergence of highly successful competitors. For example, right now there is a news that Starlink Elon Musk is coming to India, and Reliance Industries filed a petition with the government that fair competition must be there. Getting it? The same Reliance company killed competition. But fine. See, Mukesh Ambani is one of the patriot. I have a very huge respect for him. He's a patriot, no doubt about it. Because of, you know, Reliance Jio only, I can proudly tell you, I can confidently tell you, India was able to handle COVID situation. Fine. Anyhow, that's a different story altogether. Fine. There will be other symptoms also, going concern. Non-compliance with capital regulatory requirements. You know, if an NBFC does not comply with the capital requirement, every one of you might have seen NBFC capital requirement ratio 15% of risk-weighted assets. Banks 9% of risk-weighted assets. So non-compliance with capital norms. For example, Paytm payment bank. I hope every one of you, Paytm payment bank 2024 January, their license was removed, cancelled. Why? They didn't comply with KYC norm. Pending legal action against the company could lead to claim where company cannot meet. Changes in law which will adversely affect the company. Uninsured catastrophe, underinsured. Some catastrophe happened, we don't have insurance, everything is lost. All these symptoms show me I cannot continue my business. So what auditor has to do? Come back to this diagram. What auditor has to do? You first ask a company, sir, you did assessment of going concern. Management, you ask. Yes, they did. Did they identify events and conditions? What events? Show them the list. Any of the symptoms present? You also check. Sir, presented, sir. Further procedures you must do. Oh, events and conditions are there. Why? Now events or conditions are there. Can you straight away say company is closing tomorrow? You can't say that. You need to perform additional work to decide whether material uncertainty there or not. Whether material uncertainty is there or not, you need to decide by performing further procedures. Further procedures are called as additional. By performing further procedures, after performing, you will get a clarity. Sir, what is further audit procedure? I will come back to it later. Once you perform further audit procedure, you will get a clarity. Yes, material uncertainty there, sir. No, sir, material uncertainty is not there. For example, Tata Motors is having a loss. Just because they have a loss, negative operating losses they have, negative operating cash flow, can you straight away say Tata Motors is closing tomorrow? No. So in some companies, you know, symptoms will be there, but that will not result in material uncertainty. It is not uncertainty about future. Material uncertainty means what? In future, uncertainty is there, which is so big. That is material uncertainty. For Tata Motors, there is a loss. Does it mean Tata Motors is having material uncertainty? No. Suppose, sir, material uncertainty is not existing, sir. Material uncertainty is not there. No problem. Material uncertainty is not there. Oh, material uncertainty is not there. But company has symptoms, no? Yes, company has symptoms. Is the company liable to disclose the symptoms in financial statements as per Schedule 3? Check out. Schedule 3 applicable framework. Whether applicable financial reporting framework require disclosure of symptoms, events or conditions? Sir, no sir. In India, nowhere in the world you have to disclose about the symptoms. You can straight away give which opinion? Ultimately, unmodified opinion. Sir, material uncertainty not there, sir. But under the framework where company prepare financials, no, we need to disclose the symptoms. Oh, financial reporting framework require disclosure of symptoms even though going concern there is no issue. Did the company disclose? Yes sir. Unmodified. Sir, they didn't disclose, sir. Something which they require to disclose, they didn't disclose. It's a material misstatement. Modified opinion. Simple. Sir, the point is, events or condition is there, right? I verified, I performed further audit procedure, right? I performed further audit procedure, right? I discovered material uncertainty. What is that? For example, Air India you take. I will show you Air India audit report. Okay, what exactly happened Air India audit report, I will show you. Now, you see here, Air India audit report. You go independent audit report, I will directly show you. You see, independent auditors report. You know what auditors told here? You see here, the company had an accumulated net loss. Sorry. The company incurred a net loss of 77,000 million, nothing but 7,000 crore. In March 2020, 1920 financial year, company had a net loss of 7,000 crore and company current liabilities are exceeding current assets by 54,000 crore. Accumulated losses are 70,000 crore. In spite of this, you see, tell me if this is the position, they don't have bank balance, they have a negative. Material uncertainty exists. Yes or no? It's a loss picture and it's also uncertain. We don't know how long the company will continue. Nobody knows it. But you know what company did? In spite of these events, in spite of the situation, which may cast a doubt on anybody looking at this position, company cannot continue. They will say, but the management is of the opinion that going concern is still appropriate. Oh my God. In spite of this, company is feeling going concern is good. Why? In view of support from government of India. Because government of India is supporting, company decided to go for going concern. As long as government support is there, they don't have any problem. My question here, how long government will support? Directors are not answering. When I perform further audit procedure, no, they said we are running successfully, sir. Yeah, I have. There is a loss. There is a negative position. There is a negative working capital. But still we are running successfully. I asked them one question. How long government will support? Directors were quiet. They said, no, sir, we are also doubtful. This is material uncertainty. The moment government withdraws the support, you will close the business, right? This is material uncertainty. Now, if material uncertainty is there, if material uncertainty exists, auditor has to check. Okay, material uncertainty is there. Is still going concern appropriate? Air India said appropriate, sir, right now, because government of India is supporting. Material uncertainty is existing. Still company is feeling going concern is appropriate. Fine. Tell the company to disclose everything honestly in the financial statements. Air India auditors, Air India, no, management is so humble, so honest. They disclosed this true position in the balance sheet. Going concern is appropriate, they chosen, right? Even though there is a material uncertainty, yes or no, even though material uncertainty exists, they chosen, going concern appropriate, right? That situation they disclosed honestly. You give unmodified opinion because they disclosed everything honestly. I know going concern is bad. Air India position is bad. That is not the basis for our opinion. Did they disclose it correctly in the financials? Yes. Unmodified opinion. Sir, they didn't disclose, sir. They are playing hide and seek. Like they are showing going concern is very good, as if nothing happened. Material uncertainty is there, sir, but they are not showing anything like that. Then give a qualified or adverse, because financials are misleading. Now suppose you see going concern is appropriate and they disclosed it. What they disclosed? Material uncertainty they disclosed and chosen going concern appropriate. You give unmodified opinion. But tell me, you are giving unmodified opinion on Air India, right? it will show the it will convey the public that nothing is there in this company, everything is good. If you give unmodified opinion regarding going concern, if you did not talk about going concern in audit report, public think that everything is good. But there is a big issue, material uncertainty point is there in financial statements, big issue is there in the financial statements. Everybody in the public has to see that note point. Yes or no? What you will do? Emphasis of matter para. No. Actually, emphasis of matter para is correct. You can highlight there, but don't highlight it. Emphasis of matter para you will use for highlighting going concern uncertainty. In which standard, emphasis of matter para you will use for going concern, in which standard, 2410 and 2400. In a review standard, you will use emphasis of matter para to highlight going concern issue. But in audit, in case of audit of financial statements, going concern issue shall be highlighted under material uncertainty paragraph. What is the paragraph? Material uncertainty related to going concern para. Yes, one more element in audit report is completed. You saw audit report format, contents of audit report. One of the content is what? Opinion, basis for opinion. Below that, what is there? Material uncertainty related to going concern. When that para will come in audit report? Very simple. The company is facing material uncertainty. In spite of it, they choose an going concern appropriate. You also felt okay because government is supporting. You also can't deny. But how long they support, that is what doubtful. But for that, company honestly disclosed in notes to accounts also. As long as government support, as long as government is supporting, we will happily continue. The moment government stops supporting, we will withdraw. So that is what company also openly told. So material uncertainty para. And you will give unmodified opinion, and you will highlight that issue in the material uncertainty para, because this is a very important issue. This is a highlighting issue. Material uncertainty related to going concern para in the audit report is there, right? That's a highlighted para. Just like emphasis only, this also. That's why you see in Air India at the end, our opinion is not modified. Same point you will mention in emphasis also, our opinion is not modified. Same you will mention in material uncertainty also. Why? Material uncertainty relating to going concern para is also emphasis of paragraph kind only. Remember. That's it. Sir, for example, material uncertainty is there, sir. It's not Air India situation, sir. Company is already bad. Company operations are already stopped. Company loans and all matured already. People are questioning already. The company is not at all doing any business. Sir, going concern is inappropriate, not at all appropriate. It is material uncertainty is existing, sir. Not only uncertainty, it's actually going concern is inappropriate straight away. Going concern inappropriate. How the financials are prepared? Sir, they're not disclosing this, sir. They're not disclosing this. Financials are prepared going concern basis. Straight away adverse opinion. Sir, going concern is not appropriate, right? Honestly, company disclosed it, sir. Very honestly, they disclosed it, sir. Then you again give which opinion? Unmodified. Company going concern is not good. And in spite of it, they honestly disclosed. And you know what? Financial statements also, they prepared using liquidation basis. There is one point, I think some of you might have seen this. Suppose going concern is not appropriate, and not appropriate point they showed in financials, and still they prepared financials using same accounting standards, gap and all historical cost. Again, you should give adverse opinion only. Just because they show going concern inappropriate openly in the financials, that doesn't mean accounting is right. Accounting must be, if at all going concern is not appropriate, accounting must be on liquidation basis. If at all accounting they didn't do on liquidation basis, you will give adverse opinion. Even though they may show going concern inappropriate and all in the financials, that and all doesn't matter. Getting it? So going concern not appropriate. And is it disclosed in the financials? Disclosed it, sir. Not only that, they accounted financial statements on liquidation basis, realization value basis they accounted. Then give unmodified, highlight the same in emphasis of matter para. This is what asked in May 24 exam. Even in the question bank, I will show you. For example, in the question bank, just a minute. You see here, Delhi branch. For example, yes, this is the question exactly which is asked. This is the question. In your ICAI book, completion and review chapter, you go to completion and review chapter, or maybe you can come to audit report chapter. In our question bank, it is 164 page. In May 24, they asked this as a drafting question, my dear. I showed in the previous session drafting. No, I think some of you might have felt why drafting and all. Drafting question is asked in the May 24 exam for 5 marks. You see, you need to write independent audit report opinion para, you need to write basis for opinion para, you need to write emphasis of matter, you need to write about the going concern situation which I told. You know what happened in this company? You know, a company has incorporated one branch in Delhi and they decided to close that branch. Going concern is missing. And what company did? You know, the company correctly disclosed about the matter. Getting it? What they did actually here, you see, the company correctly disclosed the matter regarding the intention. Further, you know, they disclosed everything correctly. Okay, so incorporated above matter everything, and values are also, the assets and liabilities are carried at values likely to be recovered. NRV values are they valued. So auditor will give unqualified opinion. You see, unqualified opinion you give, and basis for opinion you will mention. And in emphasis of matter, you will draw attention to Delhi branch which management is closing, basis of accounting and all, you will highlight it here. That's it. 570 standard is almost over. Getting it? Now I want to show you one point here in Air India. Sir, going concern, some students many will ask me, sir, Air India auditors gave qualified opinion. No, you said material uncertainty when going concern, is there unqualified opinion should be given? My dear, please use brain. Little bit brain is required. Okay, qualified opinion here they gave on some other issues. Here they made 3 issues, right? Going concern they didn't qualify, they qualified on some other. On going concern they gave unmodified opinion only. Please interpret opinions and all correctly. In some standards, no, they say modified opinion means on that matter modified opinion. It is not about in the audit report modified opinion. Please, I hope you understand this point. That's it. So now look at the going concern. Ultimately, you know, I will finish this. So that's it. With this, that diagram is understood. If at all you understand this diagram, 99% going concern you understood it correctly. You know, in going concern, auditor has to do risk assessment. What is risk assessment? Auditor has to consider whether events and conditions exist. For that, what you will do? Whether management performed assessment. They performed. Discuss the assessment. Get the workings. Just a minute. Yeah. So get the workings of the management. Management identified events. Management identified events and conditions that may cast a doubt. Evaluate management plans and all. Management has not performed assessment. Discuss with management on what basis they did use going concern. Suppose they didn't assess at all, on what basis you use going concern, ask them. And remember, if at all any events are found, if at all any events and conditions are found related to going concern, just a minute. If at all any events and conditions are found related to going concern, actually I'm using my Windows system. I need to again use my MacBook. That is best actually. Okay, because this is slightly hanging in between. Fine, anyhow, not an issue. So audit procedures, if events and conditions are identified, you need to do additional audit procedure, right? Nothing but what? You know, ask management what are their plans for future action. You ask management what are their plans for future action. Evaluate likelihood of management plans. Just a minute. So additional procedures I told, right? Events, conditions identify, additional procedure you should perform. Additional procedure you should perform for what? To determine whether material uncertainty there. How do you determine whether material uncertainty? Ask management plans for future action. Analyze the cash flow forecast. You know what? In the recent CA Inter, they asked this C point as a 5 marks question. How they asked? You know, they gave one big case study. Cash flow forecast you need to analyze, right? Give 2 examples. These 2 points they asked, and additional procedures objective they asked. This question they asked in CA Inter Jan 25 for 5 marks. Similar way they can ask you in final also. What is the objective of performing additional procedure? To determine whether material uncertainty exists by performing additional procedures. By performing additional procedures, you can decide additional, you know, everything is there or not. Now look at. Just a minute. Yes, you see here. So any other information additionally available. Last time management did assessment, now you are once again doing assessment. Additionally any data is there, check out and get a written representation. Management said, sir, yes I agree sir, some bad position is going on for the company, but we have these plans upcoming, so with that we will revive the company like anything. All that they are saying, request representations regarding their future plans, actions, all that. That's it. So reporting, I already just now covered in diagram. Going concern is inappropriate, but financials are prepared using going concern, but auditor's judgment is inappropriate, adverse opinion. Sir, going concern base is appropriate, but material uncertainty exists. And is it adequately disclosed in financials? Yes sir, unmodified in the going concern aspect. Separate section in audit report to material uncertainty related to going concern. Draw attention of the auditor. Draw attention to the relevant note point. State that material uncertainty exist. Also state that your opinion is not modified. You see, all these points were there in Air India as it is. Suppose no, material uncertainty not disclosed. In the above diagram also I showed already. Express a qualified opinion or adverse opinion. In the basis for qualified opinion, state that material uncertainty exists and company is not disclosing correctly. Sometimes no, management has to do assessment, right? Preliminary, they are unwilling to make assessment. They didn't make assessment. Give a qualified or adverse opinion. Generally, sorry, disclaimer of opinion. Suppose no, management made assessment, but they didn't make it for 12 months. I will show you one more point here. For how long? Period of assessment, for how long? Minimum 12 months they need to make an assessment. If management assessment is for less than 12 months, please request to extend it to 12 months. From balance sheet date next to 12 months, whether company going concern is proper, management has to assess. If at all they are not, if at all they did only for 6 months and you asked them please increase it to 12 months, management is not accepting it, then you will give disclaimer, because they need to do primarily going concern assessment and show you the workings. If they did not do going concern assessment and showed you the workings, how will you know it? Disclaimer. And more in-depth about 570 discussion is there in my CA Inter Audit Marathon. Please refer there if possibility is there. Okay, there I covered even in-depth 570 standard, because in CA Inter it is covered very in-depth. That's it. 570 is also over. Now once we'll go back to audit report, once again, you see here contents of audit report. If you recollect, what are the contents of audit report? Just now we covered material uncertainty related to going concern. Now key audit matter. Now let's look at key audit matter. But by the way, responsibilities of management. What are responsibilities of management? You might have studied in CA Inter, SA 210. SA 210. Responsibilities of management. What? Responsible for preparing financials as per applicable framework. Management is responsible to provide the auditor information, explanation, unrestricted access to person, that only. So nothing big challenging in responsibilities. Now let us discuss key audit matter. Just another 15 minutes, key audit matter will be over. 701 will be over. Remember, right now we completed 700 major portion completed, 705 completed, 706 completed, 299 completed, 600 completed, 570 is also completed. Now we are going to discuss about 701. 1 2 3 4 5 6 7 standards will be completed by this 701. Now what is a 701? Key audit matter. I will show you Air India audit report itself, where they have used some key audit matter. I will show you key audit matter. You see, Air India auditors itself have used key audit. Even State Bank of India auditors also have given key audit matter. Like what exactly they're saying here? Key audit matter, introductory language. Key audit matters are those. Just 1 minute. Papa. So strainful. Actually morning, my EVO fast track class is going, CA final. So almost that is 5.5 hours class. Now in the evening 1.5 hour. Now again, now I'll have to go for gym. So 8 to 9 I'll go for gym. Again coming back from gym, again at night 10 o'clock I'll be doing this revision class. So full packed. Daily 8-9 hours I'm discussing. I think you can see my voice now. So now let's continue. Key audit matter. What is a key audit matter? Key audit matters are those matters in our professional judgment were of most significant in audit of financials for the year ended 31st March 2024. Okay, so they're very important matters from professional judgment of the auditor for the current period. These matters were addressed in the context of audit of financials as a whole while forming opinion. Oh, these matters are already verified in audit. Okay, then fine. We do not provide separate opinion. By the way, look, I'm only telling you what are important matters below. I am not giving any separate opinion. So don't think that I'm giving separate opinion. Auditor is alerting at the beginning itself. You see what key audit matter, how key audit matter they're saying. Presentation alone, observe how key audit matter they mentioned. You see what is key audit matter? Some classification of advances in banks. You might have seen in bank audit. Income recognition, asset classification, IRAC norms. Banks has to classify assets, standard asset to non-performing, substandard to doubtful, loss. Regarding that, auditor felt in State Bank of India, asset classification is a key audit matter. You see, advances is actually major item in the balance sheet, so they classified advances as a key audit matter. Okay, it's a key audit matter. Okay, what? how the matter was addressed in the audit, how auditor addressed that matter in the audit, how auditor addressed it in the audit. In audit, what they did, they are telling you, oh, our audit approach towards loans and advances is like this. These are all steps we performed in audit. Oh, in key audit matter, what they're showing, loans and advances is a key audit matter. And in audit, we did like this, we verified like this. Indirectly, in key audit matter, what auditors are telling, auditors are simply selecting some important issues in their audit, and they are just telling what exactly issue it is. And in left side, you see left side, they are telling what exactly the matter. On the right side, what they are telling, how they verified that matter in the audit. Indirectly, it is like very simple. You went to a restaurant, you ordered food, you got the food on the table. Chef also came towards you. He is now telling you, first, sir, don't eat first. I will tell you what exact. This food is a most important item in our hotel, sir. This is the most best selling item, sir. This is the most important item. We spend a lot of time on making this item. And you know how I cooked this? So I first, I switched on the stove. I poured oil. I poured vegetables. I did some fry, all that, and then deep fried, roasted, and then I added some masala, all that. Restaurant chef is coming and telling you all this. As a customer, what do you feel? Arey, why are you telling all this? I ordered food. I want food. Let me eat the food. Why are you telling about your cooking process? Exactly. Key audit matter, auditor is also telling to the shareholders how he is doing audit on important items. How key audit matters para is useful to the shareholders technically. Technically, it is not useful. Simply, we are just telling to the shareholders how we generally perform our audit. We are showcasing our skills to the shareholders. You see now. What is a key audit matter? You see now. Just a minute. I will straight away show you. You see key audit matter. Just a minute. Yes. You see key audit matter. What exactly auditor is doing? Communicating key audit matter in the independent auditors report heading. To whom this audit matter is applicable? All listed companies compulsorily they need to show key audit matter. That's why A&D audit report you will find, SB audit report you will find. Or suppose listed company, okay, it is not listed. Is key audit matter required? If law or regulation says it is compulsory. Luckily in India there is no law or regulation. Or auditor can communicate key audit matter at public interest. Further, most important point, sir, if auditor is giving a disclaimer of opinion, communicating key audit matter is prohibited. Disclaimer when you will give, man? You will give disclaimer of opinion when you could not conduct the audit properly as a whole. Major items you didn't audit, you are not getting evidence. When you are not auditing major items, when you did not audit majorly, how do you know which is important matter? That's why key audit matter is prohibited. What is the purpose of key audit matter? Purpose, very simple. I will show some matter, and how I will do audit, I will just simply show. Enhances communication value, offer additional information to the users to understand the entity and areas of significant judgment, important management judgments, important areas in the company and all. I will tell the users. It provides transparency in auditor's report by providing insights about the audit. So in audit, no, I am giving you insight how I do in audit. All that I'm just telling you, just like a restaurant chef is coming and telling you how he is cooking. Communicating, remember, communicating key audit matter. Don't be clever here, okay? If at all you need to give a modified opinion, give modified opinion. If some matter is materially misstated, cleverly don't communicate here. Key audit matter is not a substitute for modified opinion. Key audit matter is not a substitute for disclosure in financials. Key audit matter is not a separate opinion. Key audit matter is not a substitute for 570 material uncertainty. You know right now already. 570 material uncertainty means what? You know. Okay, sir. Once again tell me, what is key audit matter, sir? Emphasis key audit, other matter para, what is the difference, sir? Emphasis. Listen carefully here. Stop your thinking. Listen to this first. Emphasis means highlight. What are you highlighting? You are highlighting balance sheet P&L note, some point is there. You are highlighting that point in the emphasis of matter para. A shareholder, please read note number 40. That is emphasis. Other matter para, hey shareholder, 6,000 branches, no, I didn't audit, their report is given to me, so that's how I gave the opinion. Hey shareholder, joint auditor, another joint auditor, he gave a separate audit report, please refer. Key audit matter. Hey look, in company, no, I did audit, some important audit area is loans and advances. So loans and advances is 60% of the total assets. This is how I verified loans and advances. Difference is found, na? Now you don't have confusion between key audit matter and emphasis, no. Many students will always confuse between key audit matter. Array, key audit matter means what? You see the presentation in audit report. What is the matter? How they audited. Emphasis means what? Highlighting in the balance sheet and P&L notes. Other matter is what? Telling about other auditor responsibility, telling about joint auditors report, all that. Again, if you have confusion, I can't do anything. Okay, I tried my level best and showed you with practically. That's it. Next, determining. Sir, okay, sir. How do I know whether some matter is a key audit matter? It's a professional judgment. Professional judgment means what? You know, common sense. Common sense. Sir, auditor, no. You know, I don't have common sense, sir. Tell me how should I select? Very simple. Areas of higher risk, where significant management judgment involved, where high degree of estimation uncertainty is involved. Impact of significant event or transaction. Key audit matter can be selected from area of high risk, where significant judgment is involved, or you can select a key audit matter from the area where significant event or transaction happened. Examples: impairment, provisions, valuation of financial assets, financial instrument, matters related to revenue recognition, taxation in banks under loans and advances, asset classification, all that. What is the manner of communication? Just now I showed in State Bank of Audit report. Straight away 4 marks question will come. Factors for determining key audit matter, 4 marks questions will come. Under what circumstances key audit matter shall not be communicated, a 4 marks question will come. Purpose of key audit matter, straight away 4 marks question will come. Definition: key audit matters are those in auditor's judgment were most significant in audit of financials of current period. These matters were selected from various matters communicated with the top management. What are all you will communicate with top management? SCA 260 standard we will be discussing. Next. Finally, what is the manner of communicating? Key audit matters are described in a separate subheading, in a separate section in the audit report. SBI, separate section. Key introductory language. Introduction, what we will give? You see here, introduction, what we will give? Key audit matters are those matters in our professional judgment. Yeah, same. Key audit matters are those in our judgment were of most significant. These were addressed in the context of audit. The auditor does not provide a separate opinion. You studied all this earlier also, but you don't know why you studied this. Now I showed you how they will be presented in real audit report. Now you understood. If there is no key audit matter, suppose no, so it's a listed company, sir, but there is no key audit matter. Literally there is no key audit matter, sir. What should I do? Put heading, give introduction, and specifically mention that there are no key audit matters. Sir, it's a private limited company. No need to put key audit matter section itself. Listed company, compulsory key audit matter. But you decided not to communicate. Then say that there is no key audit matter. That's it. SCA 701 is also over. That's it. SA 701 is also over. I am telling you guys, you will not get a clarity like this in audit, never before. I hope you are now able to witness what kind of clarity is required in audit so that you can comprehend the subject very clearly. That's it. Okay, 701 is also completed. Almost 7 standards be completed, technically speaking. Now I'll go back to 700 standard once again. Okay, 700 standard once again. What are all we completed? So key audit matter, everything is completed. Right now other information, 720 is pending, 710 is pending, 610 and 620. If those 4 also completed, 11 standards will be completed. Report on other legal and regulatory requirement. This is nothing but CARO 2020, dude. Nothing much. Further, signature of the auditor. So what is the signature of the auditor? Signature, place of signature, date of audit report, UD number. So what are they? We will see here below. Below I have given detailed information. Just a minute. Yes, you see here, auditor responsibilities below, it will be the signature. How signature of the auditor should be? How signature of the auditor should be? A minute. How signature of the auditor should be? Yes, signature. So what is the signature? It is signed by engagement partner in personal name. If at all, the CA is the individual chartered accountant. Suppose he is not practicing on his name. He has a firm, sole proprietary firm or partnership firm, whatever it is. Firm is what? Then firm name shall also be mentioned along with the personal name. Membership number, FRN number shall also be mentioned. And that's it. Place of signature. Generally the city where the audit report is signed. Date of audit report. Tell me. Financial statements has to be approved by the management. Financial statements approved by the management. 31st March is the date of financials. Financials are approved on 10th May. Audit report date shall be either 10th May or later date. Can I give audit report before approval date? No. Why? Approval of financials means what? These are the balance sheet and P&L finally signed by management. This is what given to public. On that only you should give audit report, no? So date of audit report shall not be earlier than financial statements approval date by the corresponding authority shall not be earlier than the date on which you obtain evidence, and UDIN number. All certificates and reports from 1st July onwards, UDIN is compulsory. Then prescribed layout for audit report, this is not required. Sometimes what is the audit report which is conducted as per standards on auditing and international standards? Actually these are all relevant because in one of the exam they asked, but since it's a revision class I can't cover everything, so understand. Then supplementary information. What is a supplementary information? I will do one thing. I will discuss the supplementary information along with the 720 standard other information. So that's it. Right now I will conclude this particular session. In the continuing session, okay, I will discuss 710, 720, 610, 620 and CARO 2020. With that, reporting chapter will be over, where 11 standards we covered. CARO 20 marks weightage is covered. You know how much time we hardly spent till now? With including the next session put together, it will be hardly 4.5 to 5 hours. 20 marks portion is completed already. That's it. What else is required? This kind of accuracy, just check out, guys. This kind of understanding do you have earlier? Only based on revision class, this much understanding I'm giving you. Getting it? That's it. I am taking lot of stress here to convey most of the information in a clear, crisp manner with practical examples in a marathon in the shortest amount of time. That's it. Okay, so let's wind up the session and we'll continue again after a break. Okay, yeah.